The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 4th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary day. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free. Pick up that phone, dial on in, 877-927-6648, internationally 727-445-1044, especially on this wonderful Wednesday out here. Would love to hear from you. So let's go ahead and get things started. As I said, on this wonderful Wednesday, of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 112 points. She's traded at 17,638.94, trading below that hammer candle from a few days ago. So today's close is very important. The S&P 500 down 15 points, trading at 2048. NASDAQ Composite off about 41 points at 4722. The Russell down 10 points, trading at 1111. The DAX closed down 98 points. The FTSE off 73. Gold is back $16, trading at $12.75. Silver's off 11 pennies, trading at $17.33. Light sweet crude is off 30 cents. That's trading at $43.35. Lead the charge here to the upside dollar-wise. You've got Intercontinental Exchange ICE. It's got $16. ICE in their veins out there, up 6.7%. USANA Health Sciences up about $8, or $8.80, I should say. That's up about 8%. Faro Technologies up 20%. $5 and change. Plantronics up 13%. So percentage-wise, we've got some movers to the upside. To the downside, we also have some movers percentage-wise, dollar-wise. Priceline up 136 buckaroonies. That's down 10% in one day. PowerShares India portfolio, PIN. I don't know if that's a brand new day for trading this, but that's down 64%. That's a stinger. You've got the Nugget, NUGT, off 15%, down 15 bucks. Biogen down $10. That's about 3.5%. Rand Gold Resources. I hope you're not in Rand Gold Resources. If you're in Rand Gold Resources, I can only use one term: bail. Bail now. We'll go take a look at Rand Gold Resources. It's got a huge island reversal. We won't look at it right this moment, but we will during the show. Remind me about that. And those of you that are in it that are stock chartists, I'd say go back and take a look at all the other island tops in Rand Gold Resources, and that's why we're saying bail out there as quickly as you can. You got Regenerate Pharmaceuticals, that's down $8 out here. Cray Inc. down 19%. That's the computer company. That's off by $7. But let's first get into a lot to talk about. I got some emails that have come in. Somebody asking me why McKinley Morganfield, that's right, you heard it, McKinley Morganfield, why they are short Bank of the Ozarks. Actually, the question was, could we have found, in taking a look at that stock chart, where it started to fall apart? That is, you might have to look up McKinley Morganfield, but we'll certainly take a look at that. But let's go take a look at the markets, understand what they're doing at this stage here. Let's first start by taking a look at, let's go look at the VIX index. We don't usually start off our day doing that, but we're going to. And if we take a look at this chart right here, You can see, we talked about this yesterday, how important that 50-day exponential moving average line is. That is priced right now at 1552. This is currently trading at 1666. Ooh, a little devilish out there, those last three digits. But it does look to me like what we'll see the VIX index do now. This cash VIX index, it'll head up to the 1751 level. Whether 1751 is going to act as resistance, it may not. It may blow through that level, but does say that any close above 1552 today, that you'll see the VIX index move up to that level. Now, with regard to today's action, it's only up a buck. It's up only about 7%. So no sign of any kind of reversal tomorrow at this stage of the game out here. So 15, what was it? 15, what did I say it was? 1552 is the number to be watching there. But this is where you start to see some real demolition in the market, assuming that the VIX index continues to trade above the 50-day exponential moving average. I mentioned the Dow. We talked about this a few days ago. The close inside the Dow today is going to be very important as we take a look at it. And we'll take a look at some volume. We'll go take a look at the Dow Diamonds out here. But you got that nice little hammer candle back on April 29th that actually completed a 1-to-1 A to B equals CD to the downside, created a Gartley buy pattern out there, which lasted for a good day. That was it. Now the number you're watching for, and we said this a couple days ago, is that low of last week on April 29th. That was Friday. And the number that you're looking for is 17,651.98. Now, you close below that on a hammer candle. If you're long, you're wrong. It says you're going to go lower. Where are you likely to head to? Look, at a minimum, I would think we could look at A to B equals CD down projections out here. But at a minimum, it would certainly make sense that we would see move down to about 17,149. You are at 17,635, so that's another 500 points to the downside. That is more likely than not going to be the case inside of the Dow with a poor close today. If that hammer candle holds, it's got to make you say, something to think about. What I would come do is I would come back, I would take a look at the VIX, see where that is trading, just to understand the tug of war out there inside of the markets. If I go take a look at the advanced decline oscillators, which we are right now, inside of the New York Stock Exchange, inside of the Dow, inside of the NASDAQ Composite, all below zero, all in unison out here, all telling us that sellers are the ones that are in control of this market. We won't get back to seeing buyers in control with any type of confirmation until that gets above zero. And, of course, how it gets above zero and so forth will be important, or how the bottom could be formed out here. If I take a look at the New York Stock Exchange, it'd be kind of interesting to see how this actually plays out today and tomorrow. Now, the number I'm watching for inside the NYSE is the price point of 10,257.30. 10,257.30. So far, today's low is 10,263.35. Now, if the NYSE doesn't do much more to the downside, doesn't get down to 10,257.30, you know where I'm going with this, right? Then if the market continues to move to the downside tomorrow, the New York Stock Exchange would actually give an island top because of the little gap that is out here between the trading sessions of April 12th and the low of April 13th. If price trades down into it, then it's not a pattern that is of significance because it will just simply not be there. But it's something to keep an eye on. If the market finishes, poorly today, you won't have to worry about it because then that gap will have been closed. But something to keep an eye on. Doesn't matter to me which eye, but we want to keep an eye. Now, why hasn't the market been able to push through this level that it's at right now? Now, the ES Mini has got a price relative strength divergent pattern on the 30-minute, on the 120-minute, on the 300-minute out here. It needs some energy. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So the question we posed just before we went into that breakout there is, why is the market not being able to crack through these lows out here? Let's start by taking a look at the daily chart for the S&P futures contract. And one of the things that we see out here, we can see that price has certainly found resistance over the last couple of days, 2 days out here, and that is the old daily market profile low. Old support, which has failed and should become new resistance. Now, the top of that is 2059.65. So on any bounces out here, you would anticipate that that is where the sellers are sitting up there with their rifles ready to fire away. Now, price has moved down to a level on the daily chart where both buyers and sellers are comfortable with taking positions. And that's at the weekly, brand new weekly over the course of the last 3 days out here. That little center of the box, that point of control, that is priced out at 2039. We'll call it 2039 and a quarter out here. The actual low thus far is 2040.75. So that is a level, a very significant potential level of support. I say potential. Well, because we don't know if it will hold or not. If it fails, then price will head down about another 33 points, something like that. 22,006 would be the level to be watching. Now, what I mentioned is on the 3 different time frames, and as one of our Denners had pointed out, so apropos, at the same pattern, I mentioned, hey, on a 30-minute, on a 120-minute, on a 300-minute, we're seeing price push on that string, push to the downside without any kind of energy. Price, relative strength, divergent pattern. It is the same pattern on all 3 time frames, those 3 time frames inside the NQ. It is also the same thing inside of the Dow. So we can see with regard to the energy, that just hasn't been there yet at 1:20 p.m. What the heck does Steve mean? Well, what I mean is if we take a look at the 30-minute chart out here, we look for signals, we can see how price has moved lower. This is coming into the 6:30 time frame this morning when we saw the lows out here. It's pushed lower. It was doing it with less energy out here. We actually got a nice bullish reversal signal that took place at 9:30, right at the open of the cash market out here. So that says that this level on a 30-minute chart would be significant levels of support. If they fail, price starts heading down to the next level. Well, we've identified what that next level is on the daily chart, the 2006 area, another 30 points or so plus to the downside. Now that's the 30-minute chart. If we go over and we take a look at the 2-hour chart out here, it's unusual for all of these to line up with each other, and that's why both bulls and bears need to be careful. Now, that descending price channel, the blue diagonal lines on my screen out here, you and I drew those in there a couple of days ago. So oddly enough, or not oddly enough, we can see that price is trading right down into that descending price channel. But breaking down below that doesn't mean diddly out here, because price is already moving to the downside. But it may be a barrier, but that barrier is not the one that I'm as interested in as the mere fact that price has been moving lower, doing it with less relative weakness out there. Now, we don't see any kind of bullish reversal signal yet on the 2-hour chart out here. And that's not to say that we can't see it by 4 o'clock, because the current candle session, which we've got a small-bodied candle out here, it'd be very easy for the following candle, one that would end at 4 o'clock, to engulf that one. It may be the prior one, but we don't have any kind of reversal signal inside of the 2-hour chart. If we go take a look at the 5-hour energy drink chart, that is sponsored by our man Saratoga Bob, I believe. No sound out there. Well, we'll just go ahead and make a mention to our control room. It's very hard to read my lips, I would think. It looks like they're. I don't know. I'm getting some feedback here. What's the feedback? They've got sound there. Maybe, guys, you got to. There we go. You can hear it. Maybe you got to reboot. Of course, I'll just have to type that in the den. Let me just do the reboot, because control room. Oh, den just stopped. Oh. Okay, Steve-O, type into the den what's going on. Okay, let those guys know, so I can just continue on with the show out here. Okay, so the 3-hour, the 5-hour chart out here, we can see how price has also been moving lower, but we don't have any kind of bullish reversal signal there. So only on the 30-minute chart is there any kind of reversal signal, that suggests a bounce. But we do know, when we take a look at the daily, put it together with these three, that there's a significant level of support that the market is dealing with. Now, it's the same thing on all it's the same message if I were to take a look at the NQ out here. But let's just look at the NQ on the daily basis, just so we can see what it is doing as well. And this is because the NQ is the one that is leading us further south. Now, when I take a look at the NQ, if I try to, and I will, put up the weekly profiles, unless there's a new one that is formed, it's not going to save anything out here. Yeah, no saving. All those profiles are up above at different levels. So if we take a look at the current daily profile, and this was set up from a bullish standpoint. Let me get rid of price, right? See, we got a brand new box that formed out here. Now, yes, it formed at a lower level. That said, that price was going to go ahead and move lower. But notice that point of control closer to the bottom of the box. That says there should really have been some significant support at this 43.17 level. As we put price back, we can see that right now we are trading below that 43.17 area. Not by a lot. You're at 43.02. That can be taken up in the blink of an eye. But if we see a close below 43.17, a close below 43.10, which is the 0.382 retracement from low to high, the February lows to the highs out here in April, that says that price will likely move down to 41.41. So the NQ, which has been the indice, the NDX 100, that has moved the markets lower, could also be giving us a failure pattern out here. So you want to be paying close attention to that 43.17. So in putting this together, you've got to pay attention to that VIX index. The close above the 50-day exponential moving average. It cannot be good for short-term bears out there. It is not good for short-term bears out here. Breaking through support in the ES Mini, the levels that we just looked at, that will be number 2, the number 2 level to be watching. Actually, we'll go ahead and shift that to number 3, because the NQ here is the more important one, because from weakness, we'll see if there's any kind of strength, and if there's none, then 41.41 becomes the number to be paying attention to. Inside the Dow, by the way, the Dow futures, they've got that exact same pattern out here as the ES Mini, price moving right down into its point of control, right? The old daily profile, now resistance, 17,953. That's where the sellers are lined up, ready to sell out here. And what the Dow needs to do is close below 17,553, and if it does that, you're looking at 17,341 in the making. So that gives you an idea as to what's going on in the market. Yeah, we'll take a look at the ETFs, but we'll do that and try to get some volume gauge out here. We'll do that. I can tell you that it's light volume, I believe, mostly across the board. But what folks want to also know, I mentioned a couple of things out here. I mentioned McKinley Morganfield. How many of you know who McKinley Morganfield is out there? And we'll come back to that. Let's go take a look at, I did mention also, hey, if you are in Rand Gold, bail, I believe, was the term that I used out here. Why? Because take a look at this island top reversal inside of Rand Gold. One of the stronger stocks out there, you know, from strength, you can also see when you get weakness out of strength, not a good thing. Now, this has trapped like rats, I say out here. Everybody that's been in this equity, well, quite frankly, everybody that's been in this equity since about the trading day of February 16th. And we are now at May, so a long period of time. But it is these passengers out here, the ones that hopped aboard April 7th, all the way through yesterday, May 3rd, that are in major trouble out there. Why? Last time we saw an island top in Rand Gold, prices ran all the way down to the lows in September 2015. And what about the time before that? Well, we'll look at that when we get right back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome welcome back, folks. Before we went to break, we were taking a look at Rand Gold Resources. GOLD is the ticker symbol out here. And the reason that we're looking at it, we like to take a look at previous patterns, see what actually occurred out here. And we were taking a look at that huge island top that was formed thus far today, unless there's some kind of rebound out here, that formed thus far today, which in the past has identified some very significant tops out here. Now, the one before... the earliest one that I have out here, and I actually didn't even go back any further, but I don't really think I need to. If we go back to September in 2012, it was the passengers aboard that ship, USS I'm Taking You Down, that between September 14, 2012 and November 6, 2012, that got sunk like the Titanic. As this equity went from a price of $126 down to $60, cut in half, post-haste out there. It took until June of 2013 out there, so it took about 6 months for that to unfold. So you want to do all these patterns work out here? No, here's the more recent island top out here, the one from May in 2015, just for about 4 days, and price went ahead and it went from the $77 level down into the $55 level. So you want to be careful. On top of that, you've got some volume coming out of it. So where's the first target inside of Rand Gold? Well, certainly it's going to go ahead and be this breakout gap, which is going to be, we'll say, give it the price range of between about $74 to $80 out there. Those would be, the first areas. That does not mean that's where it stops. You've got plenty of little breakout gaps along the way inside of Rand Gold Resources. So be very careful if you are inside of that equity. Now, why are other reasons? Somebody had typed in the den, must be a Rand move. Well, we could say really must be a dollar move out here. We don't have to take a look at how the other currencies are trading necessarily in comparison to the U.S. dollar. But what we do know is that the U.S. dollar index found a bottom. Of course, you say, how do you know that, Steve? Well, if we take a look at 2 days ago, yesterday, we took a look at this. We see the hammer candle, piercing candle as well that formed here yesterday. We want to go take a look at the continuous contract, though. And take a look at what it did. The U.S. dollar index did what it was supposed to do. It was supposed to show us a sign of strength at the bottom of the consolidation, just as it would at the top of a consolidation show us a sign of weakness. Well, we know that it actually did that back here with this huge move on December 3rd, that little key reversal session out here. And now as price got back in that 92 level, right, you can't bust them down. What's it going to do? Well, it's going to go at least try to bust them up to some level. You may say what level. We can look at retracements and we can take a look at trend lines. The first retracement level that you would be paying attention to is right around 95.21. You are at 93.28 right now. That becomes the first logical level where the U.S. dollar index ought to get to. I would say from a trend line standpoint, you'd probably put something like that in there. That says that you get above the just the 0.382 retracement. You get into the 96 level. That then brings into play probably 97. Maybe it makes a move all the way back up to the top. I don't know. But right now you've got a very important. Now, this is both good for both bulls and bears because the bulls did what they were supposed to do, defend their territory, the bottom of the consolidation. They did it with a hammer candle. That means if, in fact, they fail to hold that low of 91.88, it will be curtains. It will be a move down to about the 84 level inside the U.S. dollar index. But we have to go with what is at this stage of the game, not what will be. So for those of you that are long mining equities, that are long the metals out here, you're getting a signal that the U.S. dollar index is done going lower for the time being out there. So be very careful. And all that means is make sure that you have your stops in place out there. So that is what's going on inside of that sector of the marketplace. With regard to light sweet crude, let's go take a look at it. Straight out at 43.31. Light sweet crude is on its way down to the bottom of the rising price channel. I suspect that becomes the level as to where this market may find its next bottom. Whether it's the next bottom that takes out the highs, I don't know. And please, the person that keeps sending me emails that's telling me that the S&P is going to 666, that's been doing it for a year and a half, please stop sending those and junking up my junk mailbox out there. It is unnecessary for you to do that. So I know your feelings, and that's your call, and that's great out here. But just stop sending me those emails. Send me some love mail. every now and then out here. In the case of light sweet crude, we can see a nice little rising price channel that's been established out here. If we go ahead and turn on our market profiles, let's go see where price is likely to find its next level of support. Well, that next level of support is nearby out here, okay? That nearby level is at a price point of 42.93. 42.93 is where we'll see whether or not light sweet crude can find some support. I don't think that it will hold that area, and that says that price comes down into, I would say, somewhere between 39.85 and maybe just somewhere slightly above that level. Now, look, if in fact we see light sweet crude break through this rising price channel, if it starts breaking through there with some volume, then guess what? Then that becomes a level of where, because of the great correlation between light sweet crude and the market out here. Then that'll tell us, that'll give us a signal that light sweet crude is headed lower, that the VIX probably takes out that first level that I gave you to the upside out here, and we take a look at some lower prices. It's not 666. I repeat that. It is not 666 out here with regard to where the market is headed any time in the distant future out here. So we've got light sweet crude, we've got the U.S., and this is supporting, a pullback right where we take a look at the U.S. dollar index. So because of the way that those two correlate out here, and with the U.S. dollar index being unable to go ahead and bust out its lows and have that nice level of support out there, what we've got to do is really pay close attention to this out here. So we can see the market's just off 94 points. The Dow, the S&P down the 1231, but down $12.31 out here. But what we know is stiff levels of support out here, right? So it's not that complicated. That doesn't mean if you're short to not stay short. It depends what you're short, of course, but you should stay short out here. I mean, the market has changed its trend. We don't have total agreement across the board out here. We don't have a lot of confirmation from all the indices, like the New York Stock Exchange, like the Wilshire 5000, but we're getting there. Let's go out to New York and speak with Maria. Maria, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm good, and you?
I am doing very well. Thanks so much for asking. And you wanted to take a look at Apple. Are you in this equity, or tell us what you're doing?
Now, I was trying to see if it will break the 92 level. And in fact, I was hoping for an ABCD down all the way to around 81, 80. That didn't work out for the time being. So I was wondering if what we're seeing now is just a retest from the lows, and we could basically eventually rebound and close that gap at 105.
When we take a look at Apple, the message, so if we take a look at, let's try to answer a couple of those questions. First, a retest of the lows. And I would say that the answer to that looks to me like yes. But the retest here, hey, Maria, we're just going into break. Would you be kind enough to stay through this next break out here?
Always.
Okay.
Yeah, thank you.
And then we come back, folks, we're going to take a look at Apple. We're going to answer, it's going to be able to bust through these lows, the price point that we want to be watching, and the upside potential move inside of Apple. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're on the line with Maria in New York. We're taking a look at Apple. And so, Maria, if we use one of our metrics being volume and we take a look at the information coming out of that on a monthly, on a weekly, and on a daily, what it's communicated to you and I is it just doesn't have the volume to bust through those lows from August in 2015. And on a monthly basis, it did 1.6 million shares during the month of August. And last month, we saw 872 million shares. So, half of the volume out there. That doesn't mean that it can't break through there. But certainly if we just use volume, and we should, as one of our metrics, it doesn't have the energy. Now, the week that began August 24th, you had 500,000 shares. And the first time that Apple got down to test that area, it never got down to actually touch the bottom of that swing point, but close enough for our work, 380 million shares. And that was the week that began January 25th. And then last week, 349 million shares. So it just seems like there is not enough energy on the weekly, on the monthly, and even on the daily. The numbers that we're taking a look at are the, I think it was 162 million from August 20, I don't know where it happened to my, there's the volume's up at the top now. I don't know how it does that every now and then. But 162 million is the number, and then the last time down here was 55, and then a few trading days ago was 48. So it continues to test and test and test that area. What I would have to say we have to watch for is that 92 level. It's right now it is certainly support. And what you and I know is that, look, if a level of support breaks, old support that should then become new resistance. And so if it can break below that, then what's the target that you have for Apple?
No, I had 80 basically around because I was doing the ABCD.
Okay.
1 for 1.
Yes.
And it was around 80 because I think it was 132 to 92, more or less 40 points, and then you ride it back to around 122, I think. So yeah, 80, 82, more or less around there.
Now, are you short Apple right now?
No, I'm not short. No, I'm not doing it because I tried to do it a couple of days ago, and I realized that in fact, yeah, as I said, the volume was not there. It was like rebounding. A lot of people were thinking it's going to break because there's a kind of head and shoulder they're looking at. I was thinking the more people there are, the less I have a chance it's going to happen. So I'm just waiting for a better level to sell it, basically.
Okay, so let's take a look at that better level to set it at. So on a bounce, to the extent that you want to go ahead and play Apple, and if you can see this bounce with light volume to the upside, the first target area for you to be looking at is actually inside of that gap. And what I would be looking at is the 95, let me see here, let me make sure I get this right for you, is 99.44. So 99.44 happens to be a brand new market profile, TAS market profile that formed yesterday. So 99.44 is the top of that box. That also happens to be the bottom of a weekly profile that's been around for, about 10 trading sessions or so. And that's at 99.80. That would really be the ideal first place for you to go ahead and take a stab at a short. If price were to close above that, let's say the first time up it rejects that area, and then for some reason it moves higher, then you're looking at Apple probably going ahead and filling that gap, in that 104 level. But on a bounce inside of Apple, that's where you would look to possibly play the short side, if your conviction is to stay inside of Apple to the short side. I would say that over time, it looks to me that is well. I won't really know until we get there. Let me just I wish I hadn't said those last few sentences there. That's the information that we have at this stage of the game versus trying to take a longer view on what Apple might do. I was going to say it looks to me like Apple will eventually break through that level. It's not playing its hands just yet that that's what it wants to do. But is there something else that you've looked at, maybe that I've overlooked as you've taken a look at?
I think you're right. I'm trying also to figure out, because it has a big impact on the Nasdaq. And
it does.
So if it rebounds, I think the Nasdaq can outperform a bit the S&P eventually on a retrace back up. And that was more or less my idea. That's why I was following it.
Yeah, no, there's no question, that is something to be paying attention to. Boy, I don't have a chart. There was a chart I probably wanted to put up. I'm going to put this chart out here. And yes, it represents, 11 or 12% inside of the NDX 100. As I take a look at this, on the tech side of things, where we've got the NASDAQ composite, this screen there that we're taking a look at, the upper portion is the NASDAQ composite, the center portion is the NDX 100, and the bottom portion is the semiconductor index. And you're looking, folks, at two lines out here, really, a red and a black line. I'm not going to go into the description of what is contained within there. But what I can tell you is when you have a bullish cross, the red going above the, and these are not moving averages, across the black line out there, you can see how you did yourself a favor to be long this specific indice out here. And when that red line dips below the black line, that being on the long side of the trade is the wrong side of the trade. And you can see, Maria, that we've got the crossover today in the semiconductor index. We had the NDX 100 5 days ago, the NASDAQ composite 4 days ago. So it does look to me like even if Apple holds up, there's still plenty of work to the downside inside of the NDX 100, inside the technology area. It looks like that is going to continue to take things lower out here.
Okay. Thank you very much for your help.
Well, you bet. And thanks so much for calling. That was
Bye-bye.
Maria in New York, the Big Apple out there. So the Dow's off 115 right now. S&P is down 14. What else? McKinley Morganfield. Most of you maybe looked that up, or somebody looked that up. That is Muddy Waters out here. So the question was, why is Muddy Waters short Bank of the Ozarks? But the actual question was there any kind of ticker symbol there? What is the ticker symbol there? Ooh, boy. OZ, well, maybe I can find it this way. I think it's OZRK, right? OZRK. So if we take a look at that chart, it's actually going to be easier for me to do this, to come back to this chart and show you where we just talked about those two Stevie lines out here, OZRK. Let's put it on this system right here. And as we take a look at it, OZRK. This is the daily chart. So the question was, with Muddy Waters going short, is there some way that we could, as somebody could have identified when the time to have shorted that stock was? Remember, we just looked at this, really, these two sets of lines inside of the NASDAQ composite, the NDX 100, and the SOX. So thank you, Maria, for even asking that question, because it just makes this a whole lot easier. If you take a look at that crossover out here, that crossover occurred on the trading day of either December 9th, looks like December the 10th. December the 10th, and this is when this equity had closed at about $50. The actual high out here was at 55, and that gave you the short signal, right? Price moves down. It makes a low out here on February 12th. You then see a crossover that says being short is the wrong side of that trade back on March the 5th out here. We now have, a couple of days ago, another crossover to the downside out there. And while this is doing that, we can see this bottom oscillator reading is down below zero. So it does not look good for, now, hey, Lake of the Ozarks, hey, that is a great place to go take a little vacation. Our man, our polar bear, he's from up or over around that area. But stay tuned. This is Stevie Sun, and I'll be back to close out the day. The Dow's off 102, S&P is down 13. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 114. S&P is down 13. A couple of questions. See if we get to a couple of questions that came in during that breakout there. The first question, look, all the numbers that I gave you on the NQ, on the ES, on the Dow futures contract. Those are all end-of-day closes, not where it's trading at right now. So any closes below those figures that I gave to you, those are going to be, in this case here, end of the contract, which is a 5:15. But you can pay pretty close attention, around the 4 o'clock close to see where things are trading at out there. That takes care of that. Another question that came in is, what do I make of the 5-hour chart inside the NQ out here, which is both in a 7th wave move to the downside. So we've got a 7th wave move that is underway right now. We've got price moving lower, doing it with less relative weakness out here. What do I make? Is this a reversal area? What I make of it is we have to pay attention to it. What would change the tone of the market from the bearish stance that it has been in to the bullish? Well, remember, we just took a look at those two little Stevie lines out here, the black and red line. Take a look at where we saw that last crossover occur to the downside out here. That was back around 11 o'clock at night. That was back on April 20th out there. I believe my clients and I got short shortly after that. Okay, so we have that. The first line of resistance on any bounce out here, right now, the number I'm looking at is 4340.25. That's that little black line out here. You can see how that is held as resistance. That is number one. Now, if price gets above that, does that say that, okay, it's time to close out that short position? It might be, but I don't know just yet, and I won't use that as the line of demarcation, because instead what I have is I've got these nice market profiles that are sitting here right at our back. And the way that these market profiles for this 5-hour chart are set up, take a look at where that top of the box is and that point of control. This is set up that says as long as 4382.85, and if you're focused and you're trading on a 5-hour chart, as long as that holds as resistance, staying short is still the right move out here. This should hold as resistance because of that setup. If we see a close above 4382.85, it says that the move to the downside is over for the time being, and that's how I would take a look at the 5-hour chart. Let's go to Steve in Nashua. Steve, thanks for calling. Thanks for holding. How are you doing today?
Good, Steve. Thanks for taking the call. The theme is based generally gold, and dust is the bear 3-times share of the direction daily gold miners.
Yes.
Just taking a look at that in general, because I'm actually interested in Vista Gold, VGZ, but I figure when this stops going up, then the golds go up.
Yes.
That's my thought, anyway.
Well, here's what I can say. Here's what I can say with regard to gold, or the miners specifically.
Sure.
I don't have a signal. I don't have a signal at this moment at 1:57 p.m. that says that we've gotten a confirmation that gold is headed lower. I do have a confirming signal with regard to silver. With regard to the miners overall, and I just take a look at dust, the level that you want to be watching today is $1.61. Any close above 161 says that dust should trade higher out there. We know that the U.S. dollar index has hit a very significant level of support. It's proven itself. It gave us a nice hammer candle yesterday. We're seeing follow through to the upside. So to the extent that you believe that the U.S. dollar index and gold or the miners are going to respond poorly to a stronger dollar, we should see the U.S. dollar index move higher. So I hope that helps you. We're just about to go off the air right now, but that's the best. That's the information that I have at this moment. You bet. Thanks so much for calling. Hey, folks, stay tuned, because as I said, our man from the Ozarks, David White, our polar bear, he's going to be up next. And because it's Wonderful Wednesday, that means Tom O'Brien from 3 to 5. So have a great Wednesday. I look forward to seeing you on Taco Thursday. I'm not even sure what that means, but we'll see you then. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.